Here on the Colour of Country Life, Flow FM, good to be chatting again with Rabobank Senior Proteins Analyst Angus Gidley-Baird. How are you, Angus?
Good, thanks, Ricky.
Good to have you back with us. And let's just start on the cattle front. When I'm looking at the Eastern States, the Eastern Young Cattle Indicator, are we rallying back up? We're going to set a new ceiling this season. We're already heading up northwards at this stage in the season.
Yeah, well, I mean, it seems to be destined to try and defy me. Every time I try and talk it down, it starts to come back up again. But I think, it's edged up over the 1,100 cents mark, which, it had followed a general downward trend. Very slow, though, for most of this year. That could, and I suspect, is reflective of rain that we've had across eastern states in Australia, particularly in Queensland. And it's probably just meant people are more comfortable holding cattle and they're not pushing as many through the system and given people a little bit more confidence to hold cattle. I don't know if we'd necessarily see a big change in restocking or herd rebuilding as a result of it, but it's definitely providing confidence to the industry.
I thought when it came to the herd rebuild, we still had, in terms of record numbers in Australia, we still had quite some distance to go before we'd be back up at record levels. Yeah,
there's still a long way to go. I mean, we're still talking, possible slaughter numbers under 7 million head at the moment, which, compared to our big years, which are up around the 8 and 9s, we're still well under from an overall production point of view. There are limitations in processing plants, but we still haven't rebuilt the herd to be able to turn off that many cattle anyway.
Yeah, I gather so processors are active in the market, but they're struggling to get as much as they need at this point in time, driving price.
A little bit. It's probably more a case of just the challenges they've got to try and get that product through the workplace, the slaughterhouses, the abattoirs. We've got challenges with availability of skilled labour. And that just means that, they can't necessarily put on the shifts that they need to be able to try and accommodate some of these numbers coming through. Not that they're huge numbers, not that we're really testing the system, but it's a bit of a slowdown, which means, we're a little bit behind where we could be in terms of production, but seasons are good, so no one's panicking. We're not trying to force cattle through the system at the moment. It's just, we haven't been able to realise the full gains in herd numbers.
And I gather there hasn't been much, we keep an eye on this, but there's not much of a market reaction at this stage because we haven't seen anything coming across from Indonesia when we're talking about the diseases that have been detected there.
Yeah, and look, lumpy skin disease and foot and mouth disease that have been detected in Indonesia, it does make it geographically closer to us. I mean, there's always been a risk that one of these exotic diseases come into the country and have a potential impact on the industry. It's just that it's geographically a little bit closer now, so threats lifted a bit.
I imagine if a case was detected in Australia, then the way our export markets would react would be the way we'd start seeing market impacts.
Yes, definitely, and there are precedents that show that in countries that import product from Australia, or countries just generally that import product, when the exporting country comes up with one of these diseases, they generally first response is close the trade, and then you try and sort out what protocols to put in place. But I know that there's a lot of stuff going on in the background at the moment that is hopefully going to mean that if it does come here, and it's still an if, we're in the best position to manage it.
Yep, absolutely. Let's just move across to sheep. Naturally, when there's rain about and people withholding stock, similar story, I imagine, for the sheep as it is for the cattle.
It is, yeah, very similar story, and we've seen the lamb prices bounce around a little bit. They're sort of the national trade lamb indicator is sort of just bouncing around just under the $8 mark at the moment. It seems to drop to about $7.70, $7.60, and then bounce back up to $8 again. We are seeing a little bit of a softening in some of those US import prices, but they're still at record levels. So it's no real indication that the demand is dropping off in any way. It's probably just reflective of availability of stock. And when we talk about rain conditions and wet weather, that influences the ability for producers to get on farm and muster and send cattle and sheep off to market as well. So there's a bit of an up and down in terms of some of the supplies that might be reflected in that price movement.
Well, I guess when we look more broadly at just the global food situation, we can look at what's happening in the Northern Hemisphere for our cropping communities, but I guess when it comes to grazing as well, is there an element to which Australia would want to be positioning itself well for what might be a pretty poor season in terms of feed for cattle in the Northern Hemisphere as well?
Yeah, the Northern Hemisphere, and I mean, predominantly looking at the US, because it's a big buyer of Australia's red meat. Looking at the situation over there with feed costs going up, not only because domestically they've got challenges with seasonal conditions, has been very dry in a number of parts. They've also got increased costs that are being faced throughout the world with all input prices going up. So the cost of feed is going up in those places, which does put additional pressure on feedlot margins. At the moment, we've actually seen, because of the dry conditions, we've seen an increase, and we've just revised our forecast for the US production, but we've seen a bit of a lift in cattle coming through the system as producers have to push them onto feed and get them turned off. We expect by the end of this year or into the second half of this year, those volumes will drop down. We'll see the number of cattle drop. And as that number drops, it might balance out some of the challenges with costs, because it might hold prices high, which is favourable from an Australian point of view, not only because they have less of their own products, so they'll source more Australian product, but it'll also keep prices firm.
Great. Well, Angus, always good information for our farmers out there across Victoria, South Australia and New South Wales. Thanks for joining us again on Flow today.
Not a problem, Ricky. Always good to chat.